German real estate market, we need to talk. What's wrong with you? I mean, seriously, what the f is wrong with you? I know. Some of you may be thinking now,
what is Axel talking about? Real estate is great.
Real estate has been great, that's true. I mean, 9.6% average increase in German property prices after inflation in 2022 and 14.2% last year is absolutely great. How much more could anybody wish for, right? It's just that real estate in the past is probably not gonna be like real estate in the future. What do I mean by that? Let's take a look at it together by comparing the 4 factors that matter the most when investing in real estate in Germany. What's up everyone? Welcome to a new real estate video from Perfinex, the #1 English-speaking and independent financial planner in Germany. Today's question is, what's wrong with real estate in 2022? To answer that question, let us consider 2 out of the 3 things that matter most when it comes to real estate. What are those 3 things? The property itself, obviously. But what are the other 2 things? If you've seen more of our videos, you know that the property is not the only thing to consider when making an investment decision. That's why our answer, if people send us random properties asking if they should buy it, is always, it depends. Because you also need to consider the financing. Let's say you have a great property and all for 300k, but banks are valuing it at 200k only. Factor 1, the property may be great. Factor 2, the financing is not great at all because you need to put in an additional 100k in equity to make that purchase work. And factor 3 is your personal situation, your financial strategy. Is that aligned with the property, factor 1, and the financing, factor 2? Here's especially important your income and your tax rate. All kinds of important factors that we will ignore in this video. We talk a lot about real estate and your personal situation in our Real Estate in Germany series. Today, we will focus on property and financing only. And we will split each of these factors into 2 sub-factors. Property into property price and cash flow that you might get when renting out your property. Basically, return on rent. And financing is split in a general percentage, how much of the property value banks might lend you, and the realistic interest rate one could get with a reasonably solid financial situation. Ready? Let's go! Do you remember the good old days? We were just coming out of the global financial crisis. Property prices were on historically low levels. Everybody was scared of the next recession, European debt crisis, Greece situation. Real estate was considered risky and not a lot of people bought properties. Low demand means low price, right? Simple economics that I teach my students in semester 1. Let me prove my point with this study from Gutmann, a real estate agency in Berlin. You can see in 2007 were not that many offers compared to the years afterwards. The German real estate market was flooded with properties after the financial crisis because of the low demand. And that's also why prices in Berlin were insanely cheap, ranging from 500 euros to 2,500 euros per square meter. Try to find that now. Do you see the mini blue in 2021 and 2022? Doesn't exist anymore really. Nowadays it's at least 2,500 euros to 5,000 euros per square meter. That's the red bar. And the median square meter price went up from 1,520 euros in 2007 to 5,600 euros in 2022. That is almost 270% increase overall, or 18% year over year. We link you the original study on the blog post on our website Perfinex.de so you can play with the numbers yourself. The low property prices of the good old days resulted in a positive cash flow when renting out your property, because rents have always been pretty high in the top 7 German cities. Positive cash flow properties is what you guys always think we can find in 2022 when you talk to us in consultation. And I don't want to disappoint, you know? So here's the beauty that we just screenshotted from ImmoScout. 7 flats plus commercial unit for 72,000 euros. that is 30 rooms and 540 square meters for just 134 euros per square meter. Damn, that's cheap. Can this be a positive cash flow property? It certainly can if you find tenants in the back end of nowhere. And the renovations don't eat you up because this building is from 1879. Not 1979, 1879. This property is almost 150 years old. Low property prices, positive cash flow, and now real estate in the good old days becomes even better because you could finance 120% easily with a solid financial situation. 100% property value plus additional purchasing costs for notary, taxes and the real estate agent plus renovation costs because they will increase the property value anyway, right? In the past, you needed absolutely no money to start investing in real estate. The only downer is that mortgage interest rates in the past weren't that great at around 4 to 5%. The rest is absolutely great though, and that's why everybody went out and bought properties, driving up prices to historically never seen levels we had before all the craziness with the war, inflation and whatnot. We had the Gutmann study and the Postbank report earlier in the video. Both find a 10%, 15%, almost 20% increase in German real estate prices year over year. And when you have this situation going on for about 10 years between the financial crisis and the current craziness, property prices rise faster than rents. And that's what happened here in Germany in the last years. And since rents couldn't keep up with square meter prices, the cash flow shifted slowly but steadily to zero, or even negative, depending on the property of course. In my personal experience, that shift really started in 2017, 2018. Before that, there were plenty of positive cash flow properties. After that, they were becoming less and less. Except the crappy sheds in the middle of nowhere, of course. Still, 100% financing was very well possible in the past. And that's actually what I'm saying in many of our Real Estate in Germany series videos. Try to go for 100% financing if possible. It's probably the best for many people out there. If you're fine with a negative cash flow, of course. I'm currently in the process of trying to secure 100% financing for my first rental property purchase. Because of my self-employment status, I was blocked for the last 4 years to buy a property because I was considered not creditworthy. Employees need to be out of the 6 months probation period only. Self-employed people need to prove their business model for at least 3 to 4 years. Wish us all luck, because the property I'm trying to secure with 100% financing is not for me personally. It's for GermanReal.Estate. We buy it for you guys, our community that we love you so much, because you guys make all that here possible. 100% financing with extremely low interest rate was possible in the past. I've said it in a couple of our videos already. The lowest we financed for a client was 0.69% interest rate in summer last year. For some reason I can remember that number very well. Not sure why. Simply for that super cheap credit that you get, real estate was a great investment in the past. But because of the negative cash flow, we slowly shifted to a more long-term investment horizon that was built more on tax efficiency than on high returns and immediate cash flow. What is so tax efficient about real estate? If you buy it as an investment, you can deduct almost all costs from your taxes. Interest rate that you pay the bank, tax deductible. Renovation costs, tax deductible. 2% depreciation, tax deductible. Additional purchasing costs, tax deductible. Principal you pay the bank, ha! Got you! Principal can never be deducted from your taxes, as you are basically buying more and more property from your bank each month. Now, what about real estate in the future? Is the party over? What's gonna happen? Are you expecting, like many people, a crashing market? Finally, some property prices to buy again? I don't. I mean, I have no glass ball, but I don't, to be honest. Why not? Because there's no real evidence for it when the costs to build properties continue to rise. Here's the official price index from the German Statistical Office. And Germany is simply not building enough. Last year we built less than 300,000 flats. even though we would need more than 400,000 flats just to satisfy the demand for living space. And this discrepancy keeps on rising and rising from the current 100k level until we could miss almost 400,000 flats in 2031. Let that sink in. We build roughly 300,000 flats in Germany every year. 4 years from now, in 2026, when you believe this statistic, it could be that we need 600,000 flats just to satisfy the demand. That is twice as much living space as we are currently developing in 4 years from now. Again, all sources are linked in the blog post on our website in case you want to deep dive into the topic. And here's the interview with Tobias from Five Rocks, a professional German property developer, in case you want to have further insights into the German real estate market. And now you guys want to tell me about a market crash? Come on, bring the comments, bring them. So I'm fairly confident property prices will rise even higher in the future, despite the negative cash flow, because square meter prices will continue to outpace rent prices. And despite the not so great financing conditions. Interest rates have been going through the roof earlier this year, and now we are kind of stabilizing at the 3% range. But are we really stabilizing at this level? It looks like it after there was not that much interest rate movement when the ECB announced its interest rate hike that is valid 2 days before the release of this video. But we don't know what will happen over the long term. For now, interest rates look stable. The bigger issue to me is that 100% financing is probably off the table for most people. BaFin, our financial supervisory authority, already announced that they want to tighten equity requirements for banks next year. And even though we don't know anything specific yet, banks will most likely just forward their higher equity requirements to us customers. Banks always win. They will never pay the bill. They make us pay the bill. So what does that mean for real estate in the future? I'm still confident in the asset class. That's also why we are buying properties now with GermanReal.Estate that you guys can invest in then. Real estate will always be a great asset class to invest in if you have a long-term investment horizon. That's not gonna change in the near future. Just don't expect that properties will continue to rise 15 or 20% in value each and every year. And don't expect an immediate return in terms of cash flow positivity. What do you think about the future of German real estate? Let us know in the comments if you agree with me or think something completely different. Which would be totally fine, because everybody is entitled to their own opinion. See you in the next video. Take care, guys.